What's going on, guys? Get started here in just a second or two. See if I get this off my screen. There we go. Perfect. Just a sec, guys. We'll get started. What's going on, Renee? Give me a quick sec. I'm about to get started here. All right, clutch. Perfect. All right, what's going on, guys? Everyone should trickle in here shortly. I think that ping probably got to everyone a little bit late here, but they should be trickling in. But what a pretty much a phenomenal day. I think today was definitely one of those strong type of trend days, which we pretty much usually like, especially as a day trader. It's like you buy, you pretty much set, you just watch your position, and it just pretty much runs. And pretty much it kind of explains on the back end of pretty much our topic here today. Can't stop, won't stop. Why do I say that pretty much, right? What's going on, Randy? Why do I pretty much say can't stop, won't stop is because we literally had FOMC minutes yesterday. That could not stop this train right now. We had Fed speaker earlier on today. I think that was around 1 p.m. Eastern or so that we had a Fed speaker. That could not stop the train right now. So what ultimately is going to end up stopping this train? I think it's not going to be anything particularly that's going to close out the week specifically. That's going to pretty much give us our U-turn specifically, in which we're all looking for that drastic day where we have spy down double-digit points and we see obviously bear market is really back on. Right now, I think this bear market rally still has a little bit more legs in particular. It may not be the case tomorrow. It may be a little bit of a red to choppy day as the market does seem to need a breather. But I actually think next week is actually still setting up to be pretty nice. To at least start the week. So I'll get into that. But it's definitely been one hell of a strong rally. I think a little bit more in the sense that a lot of traders are still in disbelief right now that we're actually still trending as high as we are and as strong as we are right now. So hopefully you kind of caught me on live today. I kind of literally just went on there and just gave you my targets that I was watching. I said to watch out for Boeing going up to 142. That was still hovering around 139. That gave you a quick move. I've been calling for Apple yesterday to 145. I finally got that 145 this morning. I actually went and I pretty much gave you my overall PT. I was still watching that one to 147. I still think that one's still trending to 147 here along the way, and we may even have more in the future here in terms of upside for Apple, which I'll get into. So that's another one. I think I went on. I think I mentioned also about Tesla. I think that one was still hovering around 712 ish. Um, well, actually, when I first talked about Tesla, it was still under 710. I mentioned the fact that you needed to see a breakout over 710, a meaningful breakout over that level for Tesla to really start to get legs. And that was the beautiful part about Tesla. We ended up getting an intraday breakout, not just a random gap up in which we are basically not able to play. We had a beautiful intraday breakout on Tesla. That was just a beauty to end up playing. We got the break over the 710. I said to pretty much target 718. I think above that it was 724, and then 731 was my level above that, which we stretched it to about 734, if I recall. So that was just a beautiful one. But on top of pretty much calling out the levels for Tesla on live, we ended up having a cloud alert that went off in TFC. And on the back end of that, we also had a whale alert, which is pretty much one of our huge orders. That's pretty much signifies a lot of size and a lot of premium, basically. So that was just a beautiful one. They dropped about $1 million in calls for Tesla expiring tomorrow, and I kind of got the idea. I'm like, all right, they were looking for the intraday breakout. They got the breakout. Now they were looking for that basically that continuation of 10 to $15 move. And that's exactly what ended up happening. So that was just a beautiful intraday breakout on Tesla. So hopefully you caught one of the plays that I kind of called out in terms of levels. Apple, Boeing, and also Tesla. All right. But those are pretty much the three that kind of caught my attention for most of the day in terms of just the levels being so clearly standing out to me. And hopefully that ended up capitalizing for one of you guys. But I would actually hope that all of you close green. I think if you actually try to force yourself to go against the trend today, that's probably what literally probably like literally bit you in the ass basically to say you that. All right. Because when you're starting to fight the trend, especially on a day like today where it's literally nonstop and you're trying to fight the trend, saying that it's gonna break down here, it's gonna break down there. But when you have to really look at it, and this is what I also mentioned on live, is that you have to look at your leaders of the market, right? And I usually always say, where is my leaders at? Apple was still showing strength for most of the day. Microsoft was still holding strong to holding steady for most of the day, and we saw the intraday breakout of Tesla. So if your three leaders of the market here are still showing you relative strength and still holding steady, there was no reason to necessarily force the situation to go south. All right. AA, what's going on? SIDS, what's going on? Tesla will retest 761 level. I'll get to a Tesla chart and after, probably after I get after the SPY chart. I'll see if I get to a Tesla chart for you. The 761, I'm not too sure off the top of my memory, but I'll take a peep at the chart for you. My Tesla fill was not that good, but still managed to get 17%. That's the beauty. I mean, even when you feel like you're chasing, it's just a matter of such a strong trend day. You wait for any kind of dip and you wait for you to get that basically that breakout off of that dip entry. So you got 17%. I think you'd be happy about that. It's definitely better than being down 17%. All right. So you made money. I can't blame you. It's 17%. 17% is more than what you had, and it's better than being red. All right. And that's usually how you would say consistent is getting that kind of gain. That 15 to 25% gain consistently is usually what ends up adding up if you want to be realistic in terms of just staying consistent. All right. Let's get into SPY real quick. I'll get into pretty much my levels of what my analysis is right now going into tomorrow and then also basically going into next week. Like I was mentioning, that we may end up still having a little bit more legs in terms of this rally. But basically, what ended up happening is we saw the beautiful push we got over our yellow line here, which signifies our famous anchored VWAP from our COVID lows. We got over the 384.33 spot. That was just a beaut to see us basically get that push over that level. What was our next pivotal level? Was basically going up towards our next anchored VWAP, which is from our previous low of May 20th. And that was sitting at that 389 low spot. So as you see, you wicked right over that 389 spot. You got about 389 half, I think it is. Uh, yeah, 389 high. You could say 389.83 to be exact. And so tomorrow I'm gonna look to see if we end up holding this little 387 base here, 387 half. As you see previously, that was pretty much where you ended up getting a nice flush right into that level, dating back to the 24th of June last month. You based as a support on the 27th, pretty much. And so I'm gonna look to see if we end up holding that 387 half level tomorrow, and if we get a push right back over our anchor view up over that 389 low. That's what I would anticipate. Now, this is where it comes into pretty much my overhead target. I actually still have room on SPY up towards 394, believe it or not. And this is why I say it could be a little bit of a consolidation day. We could even dip back down below 387 half and pretty much still stay elevated above our lower anchor VWAP from the COVID lows. As long as we stay above 384.33, I still think that we have room to the upside, even if tomorrow is maybe what a quote unquote breather, you would say, to be relatively flat to red. I still think as long as we hold 384 tomorrow, we still have room to basically curl right back up and continue this uptrend that we've been on basically for this entire month so far. All right. So I'm going to look to see if we hold that 384.33 spot as far as the downside. If we can't hold the 384.33, then pretty much looking at our respective levels, I'm looking for a downside trading down towards 381 half. And if we really start to flush for whatever reason, next level below that, I would be targeting 378. All right. Now, here's the reason why I pretty much say that 394 spot is what I'm looking at in terms of overall upside. I'm actually going to give you my image. I think I'll do it off of the ES Futes. I think I had that line highlighted there. And you see I kind of have a little bit of a descending channel on my Futes. It looks a little bit different than my SPY, but primarily because of the fact that this actual little descending channel gives me my actual tops that we've had and our reversal points that we've had. If you actually look at the little dotted blue line, if I kind of collapse our watch list, and you get a good zoom of that, you can see that intermediate blue line on this descending channel or halfway of this channel kind of gives you your resistance points that you've overall had and your turning points that you basically had. So how did I know at what level we were basically going to end up starting to turn bullish? Was breaking roughly over this 38.35 spot, and you see that we started to get that strong rip right over that level. And the level that I'm actually talking about in terms of that 394 pretty much equates to this roughly around 39.56 level. But what I'm actually dating back to is where we had our prior breakout going into historically right now. If you're actually looking back from March of 2021, I'm actually looking at where we had a strong breakout from what level that was and where we started to really get a strong rip. And that was basically right around that 39.58 to be more exact. That 39.58 level, you see that you hit your head on it February 20 of 2021. You hit it again basically March, and then you broke out. You had a strong breakout of that level March at the end of March of 2021. So that was the level that I'm basically looking to essentially retest on this little uptrend that we have. And I think that's essentially going to be where our downturn is once we hit that level. All right. So that's what I actually got that. That's pretty much what I'm going to be continuing to look at is that level, that 39.58 level, if you're looking at ES basically. And that's what I think we actually are headed to overall. Even again, like if I said, even if we have a red day tomorrow, I still think we have a little bit more room to the upside before we overall have a downtrend. Now you could say, I mean, the puts are rolling in. You see that through the flow alerts. You probably see it in the dojo channel as well, with Avery posting it. The puts continue to roll in, but here's the key part about all those puts that continue to roll in. If you actually notice, the one thing that stands out to me is the expiration of a lot of them. And that's what I've actually been noticing is that most of the expiration has basically been between the third week of August, which is basically your OPEX week, and then the other part is looking at out to September. So those are pretty much the two expirations that stand out to me the most that I've seen relatively. And that's why I think that short term, and I'm saying short term within the next 4 or 5 days here, I think we even if we have a red day tomorrow, we still have possibly some more legs on this rally that we've been on in terms of a bear market rally before we start to see us start to flush yet again and the bears basically come out to play. All right. So that's pretty much just looking at that. That's just my analysis, just looking at that hindsight, where we're potentially looking to trade up to. That's just where I'm expecting. But getting into plays, I know Sid, you were mentioning looking at your target for Tesla essentially. If I pretty much look at it, I actually had us going into a little bit of a resistance here, potentially tomorrow. We should trade up to that 746 level, which is sitting basically a little bit more so of a downtrend resistance that I'm still looking at potentially. So 746 would be potentially my target here tomorrow. The other fact that I'm also looking at is also completing the gap fill that we ended up getting, dating back to June 3rd, and that's currently still waiting to be completely filled at that 771 spot. So if we end up getting over 746, I think you can already put it back at completing that gap fill at 771 rather than 761. I don't think there's much space between that $10 move there that's holding us from completing that entire gap fill before you get the reversal back down. All right. So it kind of makes sense to me that we likely end up filling the gap if we break north of 746. Otherwise, I would expect 746 to be our relative resistance, and that's going to be our downfall that we end up trading back down. All right. So 746 and then 771 is relatively the two bigger levels that I'm watching. Of course, within your intermediate resistance that you have that we should call out on live intraday. All right. So those are just the two big levels that pretty much stand out to me. Looking elsewhere, I think semis had a phenomenal day. I think that's something that's pretty much worth mentioning. Watching into the resistance that we had on AMD, it had a strong day, up about 5.5% at one point of the day. That was just a strong move. But we ended up getting into that resistance at that $80 mark. It looks to have not only been a mental number, but that was also your resistance for the day. You basically stopped halfway of this little gap fill that you got dating back to June 29th. So I would expect to see if we get a move over this 80.43 spot. That will be upon completion of the gap fill, and it would also basically break over our downtrend resistance that we have intermediate here. So I'm gonna look for that. If we can break over that $80 half level, then I don't think there's anything stopping us for a move up towards 86, in which that's gonna be a strong move up towards 86 and potentially making a move up towards 89 half. All right. So those are pretty much just the three levels that I would watch there. But 80 half is where I would expect continuation. North, otherwise, I don't think that we have much more legs if we can't break north of 80 half, basically. All right. So that's another one that stood out. I mentioned that I was talking about Apple. This is just a beaut so far. That was one that I kind of had most of the conviction about in terms of the upside. And that's what led me on to say that this market actually still had more of a rally in which we basically saw today. So this is one I was watching it. I was calling for it to see 145 yesterday. It didn't have enough power yesterday to finish the day, but we got that this morning. We got continuation on it. I'm still targeting 147 overall. Why do I say 147? Because you basically see dating back to May 18th, that was the level that you ended up gapping down from and gave you an onslaught of bleeding, dating that down towards giving you a low of that 132-ish, you could say. And then you end up getting a strong reversal right over that 137, that 147 yet again, but you tested 147 as support on two occasions, May 31st and then again on June 2nd, before you broke down on 147 and you got flushed out again. So I'm going to see if 147 ends up being a resistance and our turning point. Maybe we see a small gap up tomorrow morning. We smack the 147, and that may end up being our downfall, in which case we get a breather in the broader market. We get that little chop, maybe a little bit of red tomorrow before we possibly continue the rally. But 147 to me is still a hard resistance. We break north of 147 though. I think that likely puts us up towards 151 to 151 half is what I'm looking at for my overall PT. All right. So that's one I'll continue to watch on that one. Let's see what else there is. Facebook, you're gonna smack your head a little bit on some resistance here as well. This is one that I think it was relatively quiet for most of the part. But I'm looking to see if we can get north of 174 half, in which that's going to be about halfway of your gap fill. That's dating back to June 13th. If we can break north of 174 half, then I'm going to look for a stronger move over 175 half. And that's going to be a beautiful break in which I don't think there's anything relatively stopping this up until 182, 183, which will give you about a clear $10 upside from current level. So there may be a bigger move in store for Meta in the coming days here. I would just wait on it. But 175, I would wait for the gap fill to actually be completed. If you can get the entire gap fill completed and you get a break north of 175, then that'll be a beautiful move and continuation, and you should trade that one up to about 182. All right, so that's one that I'll continue to watch. I'll keep an eye on that one. But other than that, I think those are the major ones that kind of stood out to me, if I want to say. Let's see if I get caught up. Jay, what's going on? Short every rip 2022. That has actually been the case. But if you actually did that the past 4 days, you'd probably be left with zero in your portfolio. I ain't gonna lie. Um, can we see your trades today? And I didn't take too many trades today. I was doing a lot of back end work. Actually has been like that for quite a few days. I'm actually working on trying to get our cloud alerts actually back up. If you haven't noticed, that's something that we're relatively working on getting back up for us right now. So I'm actually been working on that quite a bit. I'm hoping to get that pretty much revamped and basically get that out for everyone here shortly. All right. Jay, what's up with GME right now? Let's take a. Actually, I know it was up about what $7 this morning. Damn, that was a hell of a rip that it had. That definitely went under my radar. I did not look at this one. I completely forgot. Once I started up about $7 this morning, I started kind of give back most of what it ended up having. I did not expect it to pretty much get this kind of rip though. But if I'm looking at resistance wise, I think you need to get north of 144 here. Otherwise, I can see a little bit of a continuation. If you can break north of 137 half here tomorrow, 137 half takes you up to that resistance of 144. But you need to break north of 144 to see a bigger continuation out of this. Otherwise, I think that's going to likely end up being your overhead resistance, and then you particularly come right back down. So keep in mind of that. But 144, that's that big level that you basically want to keep an eye on. And god damn, that dumped after hours. I should have looked at that. What? All right, so you didn't get the breakout level over the 137 half. You could scratch that. I'm assuming there's got to be. What's the news on this? We just got a stock split. Did they do something else? Golly, that's a flush. Where do we go from here? That's a good question now. That is a very good question. Where do we trade down to is a very good question right now. I can see 103. I mean, I would like it down to 103. That would be beautiful. Do I think it's gonna particularly get all the way down there by the end of the week here? Speaking about tomorrow particularly, I don't think so. You're basically sitting right into this gap fill that you created off of the stock split news. So you likely see if you can complete this gap fill here at this 117 high, 117.74. But I would be a little bit hard pressed to say that you even get this below 115, particularly tomorrow. I don't think that gap, this little gap down after hours, you could say, is going to take this below 115. So I would look for 115 to be support. If you get it open higher than that, you can trade it down to that level, that 115. But I don't particularly see it trading down below 115. Otherwise, that's a long ride down to 103 half. All right. What's going on? Let's see. Renee's SIGA. I'll take a look at it. AA. Do you see FedEx hitting resistance at 235 before retracing? Let me take a look at SIGA and then I'll take a peep at that Fedex for you real quick. This actually is this one of those squeeze stickers? Because it's kind of looking like that. It's definitely looking a little bit like one of those squeeze stickers. Not too much stands out to me on this one, if I'm being completely honest with you. In terms of this SIGA, there's not much that particularly stands out. You can make a case for a little bit of a ascending triangle type formation going on here right now. But the only thing is that you're sitting in a little bit of a tight range right now. I would wait to see if you can break north of basically your high that you've put in, dating back towards this May 23rd. So you would basically need to break north of 1480 to see a further breakout. Otherwise, I think you're in a bit of a chop zone right now because I'm more inclined to say excuse me, I'm more inclined to say that you likely end up testing your little trendline support here down at this 11 half in which you end up retracing on this move. So 1480 needs to break for me in terms of upside on SIGA. Otherwise, you likely end up retracing down to that trendline support down to about 11 half is what I would say. 11 half would ideally be that spot where I would say you buy off the trendline support. But if you don't particularly hold that support, then obviously you want to have a tight stop loss in place. But low risk wise, 11 half is the buy-in spot. Otherwise, I say you wait for the breakout to pretty much take place over 1480. All right. The other one, AA, you mentioned Fedex. I feel like someone made me look at this not that long ago in particular. I know I have a line here is pretty much sitting here, which looks like it actually just smacked it a few weeks ago, if I want to say that. Let's see what we're looking at now in particular. You're in a gap fill right now, so that's pretty much a positive sign right now. You definitely want to see the gap fill complete over this 233 spot, and I see you mentioned 235, so that's definitely just about around the corner, about $2 away once it completes the gap fill. Now it's starting to look a little bit like a bear flag, if I'm being honest with you. I don't particularly like this too much in terms of looking like a bear flag right now. It's not too sound, in which case you definitely want to be cautious about it. So that's just something that kind of just stands out to me. I would be very cautious about it. Just looking like a little bit like a bear flag. I could probably draw this bear flag a little bit better. But now you see that formation, that little bear flag in which your trend line kind of aligns support and resistance wise. So I would be very cautious about it right now. If you can't break north of 232 half, I think that you likely end up looking to pretty much have your trigger on the sell button if you are holding a position. Because if you can't break north of 232 half, then I don't anticipate that you get the entire gap fill up to this 233.10, and that's likely going to be your downfall, which you break support and this bear flag rising wedge action plays out to the downside. All right, so I will be very cautious about that. All right. Let's see what else you guys were talking about. When do you think the dollar will collapse? The dollar won't collapse for right now. I mean, I would say you wait until we end up getting our rate hike that's coming within the next week or two, and then we'll see what the dollar is particularly going to do. I don't think you really get any kind of meaningful action out of the dollar here in terms of a collapse in the next few days. Wait for the rate hike to really just pretty much come out, and then we should be able to see a more meaningful move out of the dollar and how it reacts, and how also the bond market reacts to the new rate hike that's going to be coming out. So that's something that I would kind of wait and see. I don't think you're going to get a reaction here within the next couple of days going into next week. Let's see if we get that 50 point, 75 point rate hike. And then I would look in particular see how the dollar responds and also the bond market responds. All right. But you have a little bit more time to see a bigger reaction in terms of how the dollar is going to move and the bond market is going to move. All right. But other than that, hopefully that was kind of able to give you guys a little bit more of a direction. I was able to give you guys a very clearer picture in terms of what I'm seeing. It's been a strong rally so far. If you would have told me that we would have definitely closed out the week strong like this, I probably wouldn't have anticipated that, especially given the fact that we had FOMC minutes yesterday. We've had a Fed speaker today as well, and the market still has not been able to shake this little uptrend that we've been in. It's been phenomenal to see. So let's see if we can close out the week strong. But I would not be surprised if we get a little bit of a breather tomorrow, and then we continue this move going into next week on in this uptrend. All right. So I do think we have a little bit more of some upside here. 394 relatively still my upside I'm looking at on SPY. Call me crazy if you want, but I still think we have a little bit more of some slow climbing to do. As you see, it's roughly on some lower volume than usual. And that's typically how it is in bear market rallies because everyone is still in disbelief of how strong this is and how quickly it's been. All right. Let's see, Renee. How do I feel about Carvana? I know that Carvana's been in some trouble. I have not looked at the chart recently. I'll take a quick peep at it for you, real quick. That almost looks like a little bit like a bull flag right now. I'm not gonna lie. Um, there's definitely not too much that stands out here to me, if I'm being completely honest with you. To think that this was what I think it was like a $400 stock, and I'm pretty sure Jay probably remembers this. Literally almost a $400 stock, $377 to $26. That is just absurd, literally absurd. But there's nothing here that says that I'm screaming to want to go out here and buy this. If I'm being completely honest with you, there's nothing that stands out to me. If anything, the biggest level that stands out to me on Carvana that I would likely wait and see, if you can get over this 32 mark, that seems to be the biggest level right now in this entire chart that stands out to me. You break north of 32, then we can start to talk in terms of technicals here, and we can get some further upside. Otherwise, if you're kind of just playing this just for like a quick buck, you look to see if you get a break over 27.5 and you play it up to 32 as your resistance, but I don't expect to break north of 32 here. All right, so that's pretty much what I would say right now. But again, for the quick buck, you basically get a move over 27.5. You could play it up to 32. I think that'll give you more than enough of probably what you're looking at in terms of making bank on that. But the bigger move doesn't happen until you break north of 32 here. All right. That's why I heard that had news. I can probably see exactly why the chart explains exactly going of Carvana going bankrupt. That's exactly what the chart tells me right now. That's why I say there's nothing that stands out to me in terms of saying that, you know what, I want to go buy this tomorrow. Nothing stands out there right now. The bankruptcy headline pretty much stands out to me, and the chart basically tells me the same thing. But on the flip side of that, we've seen where we have stocks that basically announced bankruptcy and they've rallied on the back end of bankruptcy headlines. So it would not surprise me if you do break north of 27.50. I think it's still a viable trade up towards 32, even though you have the bankruptcy news, because I've seen these bankruptcy headlines even trigger basically a rally in these stocks. And I believe, if not that, I think there's one that maybe Tom was in not that long ago that actually had a bankruptcy headline and actually moved. I don't know if it was Revlon or it was maybe another name. I probably am crazy, but I know there was a name that ended up pushing and it was off a bankruptcy headline. So just keep it in mind. But viable trade to me is over 27.50, trade up to 32, but nothing happens major unless it breaks north of 32. All right. Do you do crypto charts? If so, what are your thoughts on Ethereum? I have not looked at crypto charts in quite a minute. I'll take a look at some tonight. I haven't done TA on most of them, but I would anticipate that you hold pretty strong here relatively, at least until pretty much this broader market rally is completed. We're pretty much still in the phase of a bear market rally, if you want to say. So if it was me personally, I would say that you likely remain neutral to bullish on crypto, as well as the broader the U.S. markets here, unlikely until going into the first half of next week is my estimation. But how we end up finishing the week tomorrow, if it's just a slight red day tomorrow that we're able to basically hold around 384 on SPY, and it's not necessarily a bleed out, you say, that gives us pretty much a pause to concern that this rally is basically over. If we end up holding relatively red to flat tomorrow, I think that we end up continuing to stay relatively bullish going into next week, and that pretty much plays into the sentiment of also crypto. All right, so I think going into the first half of next week, I right now I remain bullish on crypto and the U.S. markets, but I think we need to close out tomorrow relatively neutral to red at the very worst case. All right, but if we get a bleed out tomorrow, I think everything's off the cards. I think you relatively stay cash over the weekend, and you wait to see how we if we snap back next week, or has the script end up changing from one week to the other. All right. But other than that, I will leave it with you guys there. I'll call it a wrap. So I'll see you guys on live tomorrow morning. But appreciate you guys joining as always. But other than that, you guys have a good evening. All right. Later, guys.